So let's quickly, I always just try to do this record and drop it for the purpose of whoever still want to go through it. Because, um, right, so let's go to the portal for analysis. And you can see what gold has been doing. And so let's go to daily and to just get our pivot point. So go to daily. So let's take off all of this. I'm going to take off all of this. In fact, it was better to just take off everything. But sometimes the market can be slow and still following the old pattern. All right. So you can see that the market is losing its momentum. So instead of us continuing to break up, but I told us that something there is a 4 hours order block here that has not been mitigated, and even daily order block here that has not been mitigated. So market have a lot of places that it can travel to downward. And so the effort to come down has been so much strong, right? So because if you look at it, let's go here. So you can see this is daily order block that has not been mitigated. 4 hour, 4 hours that has not been mitigated. So let's just go and then we take this now as the previous day low and high.
Good morning, sir. Your screen.
Okay.
Your screen.
Okay, it's showing now, right?
Yes, sir.
So we have, this is gold. We're always starting with gold. Now we have unmitigated order block on daily time frame and on 4 hours unmitigated down here. Now, this is just from a support that the market is still struggling to cross. But of course, you can see that there is no momentum in the market. I wonder some people want to trade normal trade now, like normal trend trade. That's where you are going to be losing a lot of money. Maybe profit you are supposed to take, you are waiting that normal. It's not normal again because the market can just give you your normal 50 pips, 100 pips, but somebody want to do the normal kind of move. Look at this is 1, 2, 3, 4, 5, 6. 6 trading days. You see what gold has been doing within a range here. So imagine you are expecting this type of move here, and it has not happened, right? And so that's the advantage of your psychological level. But that, nevertheless, you need to have an idea of where is the market actually going to. Very, very important. Now, so I've marked previous day high and low, number one. That's good. So market have been choppy within just a range here. So that has not changed the narrative that the market's supposed to crash down here. Will it? That's not a must, but just you have it and in the back of your mind. So can I still see some, relevant pivot point? Maybe one or two I can recognize, right? Maybe one or two. What pivot point? Just like a kind of high and low on the higher time frame that especially on daily. I told you what you need to check on daily and all of that. Then probably you can have one here. I think this time around, in order not to be confused, I think I'll just take out this picture from the row. All right, so you can so that you can see down clearly. Now I've done this, so there is no recent break of structure. It's just what it is. So you're going to go to a lower time frame quickly. So going to lower time frame will give you an access to an idea of what should be happening. Now, so here we come. We've seen that this was the high. So because this is a break of structure, and this break of structure was what we saw here, and this was the low. So swing high and swing low of this break of structure. So if you look at it ordinarily, there's something you may want to do. Okay, very simple. You want to do is that you probably want to take your even Fibonacci retracement from here to this place. So if you take your Fibonacci retracement from here to this place, all right, you probably want to say, okay, the market should be having between here, this is 50%, excuse me, 50% retracement. This is 61. Now, if you look at 61, it's just on top of the daily order block, unmitigated order block. All right, a daily unmitigated order block. And if you look at it, in that point, you have a very wide fair value gap that have not been fully clear. So, which is inside and tap into the 4 hours order block. Inside and tap into the, all right, to the 4 hours order block. Now, so there's so much pressure that gold should crash. Not just like crashing and then continue to go down anyway, but that a correction is looming so much that the market's supposed to come down. Now, if you're going to take from 50 to 78, it will be inside, balanced inside the daily order block, and at the same time, the 4 hours order block. Okay, so we have seen that now. So secondly, we've come here, market create internal movement. And one of the first thing that happened here was that instead to break this, it has not broken it, meaning there's still a pullback correction of this breakup structure. If we had broken this, then this will have been the new low that we should be dealing with. So it means you are looking at this. Now, if the market come back here, of course, we're looking at this double top, right, as it is that would likely to form. But there's something here, I always say that market's about 3 major things: where, why, and when. And it's still further go down to look at what do we call? If further go down to liquidity area, liquidity swing, and price action. So let's go look at it. There was a sweep of liquidity here. God, this is a liquidity. It swept and returned. That was a good one. And that sell still continue. So invariably, what the market has done is that we have, you see these pivot points, a liquidity. Right, you see this pivot point is a liquidity. You see this is a liquidity. Now, the low of yesterday is a liquidity. So the low of yesterday aligning with this are liquidities respectively. So this was a high of yesterday. You can imagine the whole journey, right? High of yesterday, the low of yesterday. So it means even if the market will go back to sweep this, that is what we call raid. To raid it or stop hunt, then you are still going to crash down. So either we raid all this, and come back. Now, when we raid all this, when we raid all this and break properly, then you are going to come back to this order block. These are internal structure now. So that means you're going to come back to this order block to tap into it and sell down, perhaps to this place. So you can have a raid of this, raid of this, raid of this. So don't fail to recognize that if this place come to break, if you break this point, you expect the market to return back up here and mitigate this other block. And after that, come back to this one. This is daily and this is 4 hours. Okay? So there are so many things around it. Then let's go to 1 hour. If we go to 1 hour, it's the same thing you are still having. So the rate of liquidity, and we have similar thing here that happened here. and sold down, but left liquidity on swept. Okay. Left them unswept. So it raises concern. Now, so if we follow it by this one now, that means you have this. That means this is a break. So you have to work with what you're seeing. This is like a raid. And then we'll turn back to a kind of area of interest. And now we sell. And then you have a break of structure. So if that's the case, you still have, even if this market travel here and didn't break this, you still have it to be rejected again, which will still come to form a sell eventually. So in whichever way, so we have liquidity line here or structure to be broken and return back up here to mitigate and then sell down. So after the sell down, you don't panic. If you're up there and you sold down, make money, that make a lot of sense. And then you want to buy back when it's forming an alignment again from here. So now, before you travel down to your normal psychological level, because your psychological level, the idea is that you can always find a trade no matter what. And then you'll be targeting 50 to 100 pips. That is the whole ideology. So if you go back to 30 minutes, you are forming the similar thing. Here is a break of structure. So you have here, so the market, so probably you are still having another point that the market could come back up here. So the market could return back up here to 4,198 or 4,200 thereabout, and still sell down to break the structure and continue going down. So you are still going to find selling opportunity because on a lower time frame, the market is bearish. Okay. Now going to 15 minutes. So you can have the same thing on 15 minutes, stop hunt and a break of structure and then a return. This is another point. This is a supply zone. And this supply zone. And so I told us that this supply zone, and we have a fair value gap, massive one, that was rejected. I have it on the other chart, right? We have a massive fair value gap that refused to be totally mitigated, remember? So rather, we're having series of rejection from there and selling down. So all of these, then you have, this is a break of structure, and then you're just rolling, then having a kind of sideways move like an inducement. So even if you travel up here, so you have to recognize this point again. There are so many points here that the market will travel to and reject to sell. So maybe today, as the market is doing what it's doing right now, you're going to find out the market come up to this point and reject. So you're looking for a sell, right? So you're looking for a sell. But if the markets forcefully break all of these and bounce above this point, which was even yesterday high now, and bounce above it, but bouncing above it is that to stay above bar and retest on it, then you now be buying, going up normally. But if you just come back and sweep it again, like here, then you are still going to be selling because that's yesterday high, and that's a sweep of liquidity. The same thing, the market sweep this one and return back to this zone again. You'll be buying from here to target here, right? So, but recognize that we still have some down move that have not been completed. So going to 5 minutes here is not necessary. And so that's where you now say, okay, on my 5 minute, 15 minute, 3 minutes, you want to go to your psychological level. So let's quickly go there. Okay, no, we have to analyze other market quickly so that if we can find a trade. Now, there was a trade yesterday that was said, this is why you need to understand the dynamics of the market. Sometimes we can be very static and we're not looking at the changing situation of the market, right? The changing situation of the market must be recognized. So like I said, if you go to gold now, you can see on gold on your 3 minute or 15 minutes, gold is actually standing on the psychological level, but it's not forming a proper buying for me and you, right? Go look at it. No power of three there, something like that. But so look at all of this point. So that's what will now motivate you to go to a lower time frame because upon this here was a buy to 50 pips. So how do they do that? So you are going to, that's where you go to your lower time frame so that you could see it on time. Okay. Excuse me. And look at the power of three here, sold down to this point. All right. So now you go back again to maybe your 3 minute, right? So your 3 minute, look at power of three because it's from at the middle or the minor psychological level. So minor psychological level. Now, after you sold your stop loss above here, it's as if it was going to stop here out until it dragged. That shows the kind of uh, problem of liquidity we have in the market. And now, now finally, probably touching here, and then you probably want to wait to see how the market conclude and give you what you're looking for. So, but in general, you see that there's no much liquidity. So when I see somebody say, I'm holding a trade, I ask what is giving the person morale, right? So, because this is not a time where market is trending, right? So if you go to 1 minute, so you can see now on 1 minute, so at a point, if you're on your MT5, by the time you enter all this trade, you are opening 1, 2, 3, 4, 5. That's why you look at some people MT5, right? You are seeing 10 cents, 20 cents, $1, $2. How come about that? That is to say, when they enter here, on their MT5, so look at it. When they enter here on their MT5 here, and to this point, this is 17 pips. Now, even the person is using 0.1, 17 pips is $17 already. So your own is that when you are scalping, you have seen money, you collect it, right? Now, if you go back to this point, and this is another power of three, it shows you here and was detailing. So then let's go back on this power of three here. Excuse me. Come on, this is 26 pips, right? And the market just doing, remember, you are working by a situation of things that no volume and all of that. Now, this is 20 something pips, 23 pips or so. Now, if it's 23 pips, thereabout, you have opened 3, 4 positions. You may have closed some of them. And if it's like you use let's say 0.01 or 0.02, yeah, or 0.05 as the case may be. So that's 50 cent by 26 or 23 or 22. So 22 by 50 cent, it's $11. All right. So sometimes you see all of those small money, $1, $2. As why? Because those people already know that market is choppy. And then as the market is just presenting itself, they are collecting the money. So the market return back up here. This is not a power of three, but you have a resistance on this lower time frame because this is the first point. And then the market, massive engulfing. This is what we call change of in price delivery because this market, this engulf this. And so now you are taking another trade, right? Now, so if you're scalping, you are there and then you are following the movement. Look at it. Look at another one, another 21 pips and all of that. But in all, look at all the journey here, here. So for somebody who take just one trade, of course, this is not too long. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, and 9, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 47, 48, 49, 50, 51, 52, 53, 54, 55, 56, 57, 58, 59, 60, 61, 62, 63, 64, 65, 66, 67, 68, 69, 70, 71, 73, 74, 75, 76. So this like 1 hour, this 1 hour, 15, 16 minutes for this your trade to have concluded your target or this psychological level. And so if that is the case, then you are looking at this. So that will have given you 60 pips. So like I'm just showing you the dimension at which some people actually follow the trade. And because it's presenting so much opportunity for you to tap in and actually even look at how you could, if you can go ahead again and then, although you should know what you are doing part time. All right, maybe you have two phones, you log into your MT5 uh, on the two phones, one particular one you dedicate it to gold scalping. Oh, yeah. So you can do your psychological level on that MT5. You understand? You can do your psychological level on that MT5 because it's been dedicated to gold, right? It can make a whole lot of sense. You can see now, wallowing down. So that means he's looking at coming down massively to maybe this psychological level. Oh, that's massive. 100 pips will be too fast, right? But look at how sluggish it was here. So sluggish and all of that. Okay. So you can dedicate, you can open your two phones. One of your phone you can dedicate it to say, you know what? I'm going to be trading gold scalping psychological level. And so you can go to that phone and just only put maybe gold and Bitcoin and plus psychological level on them. Simple. And so anytime you come to that phone, maybe what you want to be doing is scalping. Another thing is that for live account, for maybe you fund your live account, you want to dedicate a particular one into scalping, but still, you still do that psychological level for the phone. And probably maybe what you just want to have there is Bitcoin, gold alone, not necessarily Bitcoin. If you want to add Bitcoin, why not? But you want to just dedicate only gold there. And then from one psychological level to another, from major to minor, minor to major, major to minor, minor to minor, stuff like that. Because here now, it reacted within the minor psychological level. You know, I've told you guys to not to busy your chart was not to add that one, that center here. But you have understanding of the number that is there. And then the market sold down and then you make money. Then at this point, I'm sure there's nothing you could do here. After you have taken your money here, there's nothing you could do here. Or if you're on this buy, this psychological level, you're going to hit stop loss with this move. Fine, it's normal. All right. And then you're waiting again. Can I enter? No. You want to confirm a valid stuff. So look at it. This is already the center psychological level. This is the minor psychological level. So let's watch what's going to play out there before you can now take decision. So that's about gold. I do not need to be repeating myself over and again. So let's look at other instruments. So quickly. So let's go back to the chart environment. So let's look at Euro USD. I traded Euro USD yesterday down in the same. Now, Euro USD still have a place poised to come and mitigate. If you go to daily time frame, so probably we want to look at. So, of course, this is lack of liquidity. Just understand that, right? So let's take yesterday high and low. This yesterday high. And this yesterday low. Okay. Yesterday high and low. So maybe there are other pivot points, but let me just take out this for us not to be too much confused. All right, so here we go. There's a point here. You have the market actually a downtrend before. Yeah, following this point. So if I go broader, so you're going to have something like this. If I go broader, you're going to have something like this. Breakout structure, internal structure. Now, this is the low and this is the high. So that means you are still in an uptrend. Okay? If you're going to be working with a more broader data, probably squeeze up to this point. So that means you are still in an uptrend using this because this is a low and a high, a low and a high and a low and a high and a low, then a high, a low, high, internal, no walking. This is the high from here to here. So you can see that if you are dealing with this point, zooming in, I want to plot the Fibonacci for a daily range. It's going to be from here, sorry, to this point. And then you can find 50% golden ratio. So if that's the case, the market bounced there and broke structure. So that means if you're going to work with this in a larger perspective, the market is still an uptrend, it's just in a pullback. So if that's the case, you have this as the days. This is the swing low and the swing high. So you can take a fib and probably say this to this point. Are you getting it now? Excuse me. So if that's the case, all right, so you actually have a fair value gap here. Let's expand it now. Excuse me. So we have a fair value gap here. Right? And so the market actually reacted at those points. But why doing that? You already have some selling opportunity because the market, this is the external liquidity or swing. Yet the market had presented some selling opportunity. How do you mean by that? So the market now presents internal structure and having broke here, a low here. And now this is the high. So we have a low here and a high here. So this is already a market structure shift. So this is shift. Yeah, this is shift. So returning back to that, this is the other block and the fair value gap, and even rejection at by weekly key level. That's already a sell. Now, but when you are selling that, you're actually conscious of this. But once it break this entirely, the market is already finished. It's destabilized to poise down, as it were. So many times we don't know why market just return from where you expect that it should be crashing more, because this is why we want to look at a larger broad of the market. So we have a breakout structure here. And now we return back to the origin and begin to sell. It's still part of three, right? And begin to sell. So this is just a minor pullback. And then we broke a new structure here. This is a new structure. So look at it, a structure that was broken here for Euro USD. There we have this, and then there we have this. So you want to look at, excuse me, this point for the market to travel back to, and which it did. Here you have it, the market broke structure and came down here. Now, so you want the market again to break a new structure. So here we bench and stand. So we stood, remember this is the internal structure, and as an internal structure, it's still good because this is the the external structure as a low to this high. All of these are internal, but yet it's on daily time frame. Excuse me. So here we come back, the market, right? Return back up here and create a low here. This is another low. Very fantastic, right? So internally, he working with this now. So working with this is that this is a high and this is a low. Now the recent high and low, which supports your dealing range, will now be here. So let's take this Fibonacci off. Will now be this low to this high because we now have recent break of structure. This one, yeah, fine. You're still going to talk about that. But we have to work with this from the swing low to the swing high. Okay? So if there's a swing low to swing high, so if Euro USD actually come down to this point, it's not a bad deal. Okay? So that means you are actually expecting Euro USD to come down to this point, or even here. And then high. So let's take out this now first. So you're going to have another block here. You see now, that's your origin. So the market has broken this. You expect a pullback to this. Or Fibonacci retracement, you want it back to this point too, and all of that. Now, will it actually happen? So it all boils down to how the market play out eventually, but you already have all of this point. Now, so we'll go to 4-hour time frame. Excuse me. See why I'm saying when we're doing training, you will not be able to trade. Look at gold. While we're doing training, gold already presented an opportunity of buying, but it's not my job. Or sometime I don't like taking trade while doing analysis, but I've just given you an idea to reshape your understanding more again, so you can see when the market traveled down to this point. This is more or less the what do we call minor psychological level. Remember, from here, this is 4190 to here, 41980 is 100 pips. The middle range of it will be 4185. Okay, since this 4180, then this will be 4185. Look at it, it's actually at that point that you're recognizing this. Now, sometime because we are so greedy, right? You'll now be waiting and say, so since I entered too late here, let me wait to this point. No, 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 no. Now you have entered 1 or 2, 3 positions, and if you look at it from here, because market is choppy, to this point is already 26 pips or thereabout because of the time we're entering. Now, as the market continue again, it presents another power of 3 down here. And so let's look at it here. This one too is 25 pips because of we didn't enter from down here, as it were. Okay, and there was no how you're going to enter because you have not gotten a confirmation. So 25 pips and all of that, use 0.1, that's $25. So you can be collecting $25, $10, and all of that, and then you'll be making money. So eventually, this market, if you break this now, you go to there is so or 1 minute still you still have other block. So you have to understand that. So you have another block here, and then you could get there and get rejected and sell down again. So, but yours is that you are maintaining a standard of always collecting money. I'll say don't go to the market and don't return with money. Don't return with excuse to me or complain. No. Sharpen your edge, collect the money, don't give the money back to the market. Okay? So now let's return back to what we're doing very quickly. So this is Euro USD, as it were. So I said we expect, so we're now on 4 hours. Now, if you're on 4 hours, you'll see that internally, so internally, we have a series of structure here. There was a downtrend here. There's an uptrend here, because you can see change of character, break of structure, return, break of structure, return, break of structure, and then you expect return and never did. That is wipe up. And now that means it went back to the external liquidity. So if you're going to work with this external liquidity, do you know what you're going to happen now? So the whole thing you see as an uptrend here is a swing low and a swing high. Now, the market again have come down to this point. So this is a low. Are you getting it now? And then at this point, this is line, this is a structure break now. So that means structure just grow broken. And then you are now taking from this low to this high as a swing low and swing high. So if you walk by that, you still expect the market to come down. There are so many areas market can come back to now and bounce. So, but if you look at it using our Fibonacci retracement from here to this point, and you realize that you're still going to be working with this, and probably down to this point. But market is what it is and can give you a whole lot of things, okay? Now, if you walk by this structure alone, can you see now? There's another internal structure here, which is markets. This is sweep of liquidity. This is change of character, and you expect the market to return. It return and just bounce on support, which was resistant before. Okay, excuse me. But there's something significant that happened here. The market came back again here, created a new high, and then came down and just formed the same thing. Now the market continued a higher high, another structure. So now it's going to recognize this as a structure. You understand? So if I take out this, let me take out this. If I take out this and work with this man here, you see now? This man here. So that means what else we'll be looking at now is this other block. Oh, yeah. Sometimes we don't look at it critically. That's why we missed out. So here, the market, that means this is a break of structure. We want the market to return. Did he actually return? So go to 30 minutes to 1 hour, the same thing. So on 1 hour, this is a doji, right? On 1 hour too, there is a downtrend. You will have been taking trade here, but not everybody will understand and recognize it because this was a downtrend, right? This was a downtrend. So break of structure, return to origin. So break of structure, return to origin, back to this one. So break of structure. Can you see now? So maybe, so look at it, this is another origin. So you can see within and without of the market. See here? So are we going to crash? We don't know. So let's go to 15 minutes. So you go to 15 minutes. Remember what happened. You will have taken a trade here, right? Because you've seen maybe part of 3, right? Or you want to go to 5 minutes to refine the entry as proper as possible. Look at it. This is market structure shift. This is a break, sorry. And this break happened here. So you have this, right, as a high, and then the market sweep it and return back to this origin. And because you are already in a point of interest is why you are taking the trade there. I actually took a trade, just small fraction. Let me show you. Because the trade is running. All right, it's seated at $19. That was yesterday. So that means I've done 19 pips because 0.1 I use. So currency, I don't use, I use 0.1, 0.5, depending on what I'm targeting. So you can see the trade. yesterday. All right, can you see the trade yesterday? I think I wanted to even copy and send the, okay. So you can see what's going on. So now, if I've entered here, taking profit here is not a bad thing. So if I've entered here, taking profit here is not a bad thing because I will have done 1:2 risk reward. That's what it is. Okay. So let's go back to the 4 hours. So similar thing on GBP USD. This is just lack of volume. You can see this one we sold since yesterday. They're supposed to come down here. This is a clearance structure. A low, a high, return to origin, another break of structure all together here, and return to origin. This massive move ought to have correct here. Now, there's no doubt this counter because you're supposed to wait for it patiently and let it come down here. Then you are looking for a buy. So because it's an uptrend, so this is a counter trend. We're supposed to wait for the market to come down here. But in the process, that will have been another money. But look at what it's doing now. Because we have a lot of, this is a liquidity void. So the market's supposed to return back, fill it, in fact, back to this point before looking for a buy. All right, so I think I will have to pause here. I did this one yesterday in training, finding a trade here, and which happened that the market returned back to it, and that was another money. I think there was a very disgusting market that I enter a position.
We're not seeing your screen, sir.
What happened? Is it the network? Cause nonsense. Can you see my screen now? But it's still showing I'm sharing.
Your screen, sir. Your screen.
I'm trying to reshare my screen. I think the network is just messing up.
Yeah, the network is bad.
Yeah,
We cannot even see your screen now.
yeah, I'm trying to share it back.
Yes, please.
Hmm. So I've just explained about the Euro USD, and then there was a trade again I took yesterday for what's coming here. Just a moment. Trying to open something. Okay, so let's look at Bitcoin very quickly. And that sometime we don't pay much attention to the movement and then how it has tried. All right, so let me take out this and let's go on daily to see the previous day high and low. So high, and this is a low. Now, if you see Bitcoin now, inside this move, it has formed a kind of power of three, but just that we still lack volume of activities for the market. And let's go, let's take off all of this. So this was a break of structure, and this was a low for Bitcoin. Though it's a downtrend trying to reverse, that's what it means. And so if I take this, so that means Bitcoin actually came down to appropriate point. So it's supposed to be buying, right? Now, if that's the case, I think it needs to just